Hello, everyone, and welcome to the September edition of the AAA. That is the Ask Antoni Anything session. And today we have a special one for you. We are going to cover a lot of ground, mainly on the NFT topic, which is as exciting as it could possibly get in crypto. I am sure we'll touch upon the metaverse and how it is going to change the way we interact on a bunch of different levels. And to accompany me here and make this more entertaining and fun, we have Kiril Nikolov. He is actually employee number one at Nexo, funnily enough. Still standing tall. He has been around the block, joining during the early days in a capacity. I think back then it was at the sales department. But we all know that DeFi and strategy, which is his current position, is what is closest to his heart. And he's an awesome trader. He has a nickname internally about his trading abilities, which I'm not going to disclose at this juncture, maybe later on, just to keep you interested in the conversation if the content alone doesn't suffice. And as you can tell, Kiril is a man of many hats, and there is recently one new development that is quite exciting. And with that, Kiril, welcome. Tell us a little bit about yourself and this newest endeavor I just hinted to.
Antoni, thank you so much. This is a great introduction, and I'm super excited to be here and to answer questions about NFTs. Internally,
by the way, I don't hear Kiril. I hope everyone else can. But
yes,
for the purposes of this conversation, okay. It will be useful if I can hear him as well.
Should I go on already, or okay? So
yeah, there he is. Sorry,
perfect.
But I felt it kind of crucial that I'm hearing what you're saying.
Absolutely, and thanks for the introduction. I'm super excited to be here and to answer questions about NFTs. Internally, I'm known as the DeFi guy, and over the last 2 years, I built out the DeFi operations at Nexo. And even when it comes to NFTs, I'm looking at them from the perspective of DeFi. How can we build the next generation tools that will help build up NFTs into a mature asset class? Now, I would say my focus in the bear market is on incubating small technical teams and help them to deliver full-blown financial products in the DeFi space and in the NFT space. So yeah, Great. That's what I'm excited about, and that's what I'm here to share with you today.
Great, sounds good. And without further ado, I think we should kick it off with the questions from the kind audience. And the first one is addressed to me, comes from Cito. Does Nexo plan to create NFTs? Is the first question. We have a very holistic approach at everything that we do at Nexo. Early days, we were just a crypto lender. Issuing crypto-backed loans. I mean, hugely revolutionary for 2018, since nobody was offering it in any meaningful way. But what we tend to do is start out in a way that addresses the first needs of the community, as we see it, and then develop a holistic offering, much like, we had asset-backed credit lines, and then we developed the earned interest and the exchange and the MasterCard and everything. And we will be applying the same strategy to the NFT world, providing as encompassing a product and suite of products as possible. So yeah, we have already started to a very large degree with NFT-backed lending. There are other exciting things, earn interest on NFT related tokens that hopefully we'll launch soon. So it will be the whole 9 yards, whether we ourselves as a company are going to issue NFTs. We'll see about that. If Kiril has any insights on what we have internally been working on the NFT, we'll share that in a sec. But, we will offer a global NFT platform that will encompass a lot of exciting things based on the needs that we see from the community and from you guys.
And on my end, I think what I can add is that NFT lending is, at least in my opinion, the most natural entry point for Nexo. We are most known for our crypto credit lines, and therefore NFT-backed credit is the natural way for us to get started in NFTs. But that's not the only way we can participate and we can help the NFT space in general. I think just by staying to our strong points, which are building around financial products, derivatives, trading, we can add a lot to the space and, of course, bring the 5 years we have in experience with the crypto credit lines, with risk management. All those things will come in handy when we get fully into NFTs.
Absolutely. Moving on to the next question. It is for you, Kiril. Beyond NFT JPEGs and its hype, what do you think of non-fungible tokens as a technology to, say, prove that you own an apartment? Asks us Milton.
To answer to this question, I think we all love overpriced NFTs. Even Nexo as a company owns a beautiful set of 3 laser-eyed apes. That being said, we are very far from this point. I think that the true NFT adoption will have come once we stop referring to NFTs as NFTs, once we start saying, yeah, I will transfer ownership to the house to you, and not even mention what, or even care what technology is behind that, because we know it just works. That being said, I think I can only speculate, of course, about which order of things we can take when it comes to adoption. I think the first to get adopted will be internet native and online native assets. Obviously, JPEGs was the first one. I think the next one will be domain names. We're already seeing a lot of traction with Ethereum name service, for example. And yeah, I think based on my experience with domains in my previous life, my first internship was in a domain marketplace. And yeah, I think NFTs for this space will make transferring, trading, and even issuing domain names much more easy and much more efficient. So yeah, internet native assets are the first ones to get adopted, and they will have the most natural and most quickest process from adoption standpoint. When it comes to the intersection with the real world, a lot of complications come in. So let's take a more intermediate example. If you look at event tickets, for example, we can benefit a lot from programmability and immutability. We can avoid a lot of scams connected to event tickets. If you have tried purchasing tickets for ETH Bogota, you will probably find out bots purchasing a lot of the tickets. And yeah, I think we can avoid this a lot with NFTs. But the adoption will be much more difficult when it comes to the intersection where you have to scan the ticket, let people at the venue inside. There's a lot of complications when it comes to that. And real estate is the most complex thing you can put in an NFT, just because your grandma has to be able to obviously buy and sell and transfer ownership of her house. And that's very unlikely to happen with an NFT. And if you think about innovation in real estate, we can think of the crypto-backed mortgage that we're doing since 2019. Obviously, there will always be early adopters and people that can take advantage of this cutting-edge technology. But if you look at 95% of, or basically the overwhelming majority of financing deals and purchasing deals for houses, they're probably the same as they looked 50 years ago. And yeah, so, I think we're very far from the point where we adopt real estate to the point where we can just send a NFT.
I think I agree with that. Us being inside our own bubble on Twitter and Reddit and Discord and talking to each other, we tend to think that everybody is up to speed on all things that are cutting edge and just just now scratching the surface of anywhere near large scale adoption. So I do think it's going to take some time, but at the same time, I personally finally figured out NFTs once I grasped that it's beyond questionable aesthetics of JPEGs. These are the tokens and the totems and the deeds to the future houses, whether in the metaverse or real life. And this is incredibly exciting because, just like the trouble of transferring deeds of a house right now is ridiculous. I mean, some jurisdictions better than others, but bottom line, ridiculous. And NFTs could sort this overnight. But is there political will there, and what will the notaries of this world be doing, and when in the state, to protect its interests? It's going to be a long ride, but I think a pretty exciting. And with that, we can move on to the next question. All right, it is for me from an anonymous. I love anonymous questions. Can we get a rough idea of how much money Nexo has lent to users who use NFTs as collateral? Well, on the grand scale of things, it is insignificant. Say single-digit millions. So nothing fancy here, and it is for two reasons in my mind. First of all, since May, you might have noticed there has sort of been a correction mode across risk-on assets, and that includes not only crypto, but NFTs, which, are a leveraged play for the time being on crypto itself. In all fairness, tech stock and the overall market and even commodities haven't performed significantly better. So, we have been in correction mode, and these are usually not the greatest times for, the latest things such as NFTs in terms of adoption and more people coming in. So it has slowed down since May, the sheer interest for NFT-backed lending. And then, generally the adoption is nowhere comparable to, something like Bitcoin or Ethereum or all of the cryptocurrencies combined, which, have been around a decade, some of them. Well, Bitcoin has been around a decade, but, in terms of overall portion of our total outstanding loan book, really insignificant. So, but Kiril is working on it together with his team, and this will change in due course. And it also has a little bit to do with the way that we are handling the collateral and how we would go about ultimately perfecting it. Perfecting collateral is the fancy law term, meaning of, recouping the principal in the interest in the unlikely and unfortunate event that an NFT crashes in price. This does present more limited opportunities than something like Bitcoin or Ethereum, what have you, that has a constant order book and a very deep one, as the past has shown, and you can access pricing more or less constantly. NFTs, by virtue of being early days, are not that liquid. So it does take some effort on our professionals and to price it accordingly and hedge the risks.
Maybe what I can add, I think at this point the main the main reason we haven't scaled more aggressively is that we right now the NFT lending desk is still an OTC service. This means that we have a lot of people involved, and ultimately this is not as scalable as our crypto credit lines, for example. In the end, the goal is to fully automate the whole process, and at this point we'll be able to focus entirely on growing the loan book and yeah, keeping it as risk-free as it is or as hedged as it is today. So in this, from this perspective, I think this is what we should focus on, and yeah, automating the whole process and delivering an end-to-end solution rather than focusing right now on growing the desk.
Absolutely agree. All right, moving on to the next question. It is for you. Can somebody get wrecked for not repaying an NFT-backed loan? Asks us Lucas.
Okay, so I think the main thing to mention right here is that the way our loans are set up today, they are fixed term, meaning that you don't have to think about margin calls. I think the margin calls are you know, the most important thing to look out when you're borrowing against crypto. And in our lending setup today, you don't have this. So in the end, if you are borrowing against NFTs, you have a 3-month duration. The only thing you should care about is your ability to pay back, to pay back after the 3 months. And it really doesn't matter what happens to the price of the collateral in the meantime. That being said, I think every type of credit, so it's credit card, corporate debt, or even a mortgage, they have to be sustainable, and that's yeah, up to everybody to assess what is feasible, what is reasonable, and not take excessive risk. So it's also the concept of personal responsibility and yeah, making sure that you can pay back. So that's what I think.
Yeah, and just to clarify, you know, risk management would be on what you do with the loan proceeds, the money that you borrow from us, in terms of being reasonable, in terms of rates and structuring the product. We have built this in the product so that it is reasonable on its own, so you don't have to worry about that. And just tiny clarification here, and I think the question is answered. We can move on to the next one. Okay, it is for me. Nexo provided loans against certain NFTs. Do you plan to provide loans against SEC registered tokenized stocks, securities, maybe in collaboration with Texture Capital? Asks Antoni's German friend. Okay, that's cool. I think I know which one. So yeah, lots to unpack here. So, and I'll try to, you know, not be super technical about the legal part because it is quite complicated. Yes, there has been some clarity on a number of different products from the SEC in the United States. There are some still, in my mind, and the lawyers that I talk to, confusing aspects with regards to tokenized securities and stocks. This usually has to go through a broker-dealer. That's why the question alludes to our partnership and stake acquisition in Texture Capital. We are working on a couple of options here of bringing the exact products as described en masse to institutions as well as the retail, because there's the subdivision between broker dealers. Some of them can only service institutional investors. Others have the necessary setup to service the retail. So we're working on both solutions simultaneously. And, you know, I am hopeful that in the not too distant future, we will be able to provide asset-backed loans having registered tokenized securities and stocks for that matter, but there needs to be a little bit more clarity here because, again, not to get too technical, but the way usually and right now broker dealers are licensed, if you can trade and extend loans against SEC registered stocks and securities, they don't want that same entity to be active in crypto. You would ask why, and it's a good question. There are no great answers, but the closest that I've understood from our lawyers that made sense to me is the fact that they don't want to mix up the risk profiles and potentially a default of a broker dealer over hacks, lost keys of crypto, etc. So they want to keep it separate. So if you want to have it on the same platform, it does take some structuring and a little rebuilding the way that the platform handles it, the clients and their respective businesses. And I don't know if this is the most exciting answer, but it is the technical reason of why this is somewhat complicated. But story short, we are looking to onboard these exact products to the Nexo experience. Moving on. Unless, Kiril, you want to add something to the SEC registered part of the question.
The only thing I can think of is now there would be much more incentive to solve this kind of product with the rates going up in treasuries and yields going down in crypto. It actually what was previously inflows in the industry, where you would have deposits into crypto because of the high yield. Now you can have crypto native assets earning on traditional TradFi sort of tools. So if you're earning 4% and lending to the US government, why not make an on-chain version from it? So I think the incentive will be much higher to solve this problem, and it will be much more attractive compared to what it was, let's say, 6 months ago.
Absolutely. And let's see what happens at the next Fed meeting. Okay, next question comes from Darsh, and it is for you, Kiril. How do you calculate the loan-to-value ratio and generally decide when to liquidate a client?
Got it. So the valuation is somewhat, how can I say, probably the best way to describe it is that it lives somewhere at the intersection of art and science. On one hand, we're working with partners that are serving as the liquidators of the collateral. So we take their valuation into account. And based on this, we are able to size the loans to make sure that we are completely covered. And on the other hand, we are using for reference an internal tool developed by one of our internally incubated projects, essentially an algorithm to price NFTs in real time. And yeah, when you take both of these tools, again, this is not crypto, this is not Bitcoin that you have, the price up to the 7th decimal point, but still you get much closer, taking sort of the best of both worlds. And as the liquidity improves, as the NFTs mature, and the asset class becomes more mature in general, I think the algo part of the solution will be much bigger part of the equation. But for now, we rely on both human and the algorithmic valuation. And Antoni, can you remind me of the second part of the question?
It was about liquidation. You touched upon one of the previous questions that there are no liquidations per se, but perhaps worth going over it one more time.
Yeah, I think the important aspect from our perspective is that we don't necessarily have to think about the liquidation. We have, before we engage in the loan itself, we are working with a underwriter, with a liquidator, if you will, which is usually an NFT long-only fund that are able to evaluate and properly manage the risk on the NFTs. And this way we don't take the rational risks on the lending, and we don't risk the collateral becoming less than the loan value. What happens usually in the liquidation? Nothing happens until the maturity date. So even if, let's say, your collateral is less than the loan size, you have potentially a few days, few weeks, or even a few months before, let's say, any liquidation is performed. And yeah, you can figure out how to go about it, whether yeah, you want to pay back your loan or not. In the end, yeah, you can make the best decision on how to proceed. And this is in stark contrast with real-time liquidations.
Yeah, it is different from, you know, the cryptocurrency-backed loans, whereby, you know, we market to market every second. And, you know, but this, again, just to emphasize, doesn't mean that if you don't repay your loan, Nexo takes a loss. It is still collateralized in the sense that we have made arrangements with the liquidators, liquidity providers, and NFT long funds that Kiril just mentioned, and we will be recouping all of the interest, principal plus the interest. So as an enterprise, we are not taking a hit, not that there is any ambiguity about that.
And just to you know, further expand, essentially, there's a lot of interest from partnering funds. This is also quite scalable, so we can increase this quite a bit. In the end, we're looking to automate the entire service and then really start to lend at scale and become the largest NFT lender out there.
Absolutely. All right, moving on. Okay, so Nexo's lending desk can be used as art financing. Do you see client interest and any potential in this sphere? This is for me. I mean, yeah, we were at this very interesting Christie's event, and you know, Costa, our co-founder and early crypto adopter, he was the one who actually participated in the live auction that took place at Christie's, and where we bought what was up to very recently my profile picture, this Bored Ape with laser eyes and a joint. You know, joint is very important for the rarity of the of the ape. I have been told by people more familiar with the matter than me. But point being that this was auctioned at a Christie's event. So this goes hand in hand with art. And, you know, the way people usually think is that about Christie's or, you know, Sotheby's or whoever's auction, that, you know, there are people on the phone and they're like, anonymous oligarchs that, you know, have hundreds of millions, if not billions, and they're bidding and they're putting up cash, which is sometimes true. More often than not, next to the guy with the hammer, there is a banker or a group of bankers that are actually financing those purchases. And yes, you hit Picasso for, I don't know, 36 million. You will have to put up something yourself, but a very large portion of it gets financed by one of these traditional institutions. And we want to be, and we are working on with several auction houses on becoming the de facto art financer in both NFT auctions, which are like, you know, crypto native, and the other aspect is, of course, like helping finance traditional art for people who have made their wealth in crypto and have their net worth tied up in crypto, or tied up sounds bad, but have their wealth in crypto and perhaps do not want to sell, then we can help them finance their fiat obligation towards the auction house by taking out a loan against their crypto. So we're working on numerous ways at this intersection between art, and finance, and NFTs, and utilizing the existing products. So this is something that I do think will grow significantly, and this will be one of the use cases for NFTs and crypto. This intersection with art, which is, I think, closer to becoming larger scale than what we talked about, the metaverse and the deeds to the houses and how ownership is transferred for immobile objects or complex ownership structures such as houses and cars and stuff like this. But yeah, terribly excited about that. Okay, I think we can move on to the next question. How are we doing time-wise? We're doing great. So Kiril, the next question is for you, and it comes from a self-proclaimed NFT junkie. When are you adding new NFT collections, and how do you decide which ones to add?
Okay, so adding new collections is crucial towards building out our NFT lending portfolio. Just like we are adding new assets on a daily basis on the Nexo platform, we should be adding new collections to the lending capabilities quite regularly. There's two things we are looking most prominently, but the most important one is the ability of our hedging partners to take on the risk of the collateral and take the directional bet that if the borrower defaults, they will take on the NFT at a predefined price. If our partners are willing to take on this directional risk, then we have the capability to add this collection to the extent, let's say, to the number or the size that our partners are willing to take it. And once this is solved, the next question is, can we handle all the volume? And right now, we have opted out of adding new collections regularly, again, to focus on a more automated solution. Once this is live, then obviously we can, not only can, but we'll focus on scaling this and adding new collections on a daily basis. And yeah, there's no reasons why we can have a doodle-back loan or CloneX or anything in between.
Sounds good. Moving on. Another question for you from Warren. How do you put a value on an NFT when giving a loan, given that floor prices constantly change?
Is this one for me?
It is for you, yes. And I'm not too upset about that.
Okay. Floor prices are, well, pricing NFTs, as I said, usually there's two methods, but for floor prices it's a bit different. So there's a lot of data out there that can be streamed real time, and it's probably the closest we are right now to a mark to market. So when it comes to floor assets, we have more or less not much room to discuss the value of the NFT. Now, if a borrower thinks their asset is floor asset is a different question. So I think that's where most of this discussion comes from. I think part of the question is about lending in terms of asset that is so volatile, and maybe the important thing to point out here is that once we have a confirmation from our hedging partners that they're willing to take on the risk against this specific NFT, we can lock in the price for the borrower until the maturity date. So we only care about the price at the time of the settlement of the loan or the time the agreement is reached, and we also that's corresponding to the liquidation price our liquidators will be doing in case the loan is not paid out. So yeah, I think these are the two parts of the question that need addressing.
I had muted myself, pardon me. Do you plan to launch an NFT trading platform? Asks us, me, an anonymous. I think I touched upon that in the first question when we discussed that, you know, trading NFTs is, you know, does present some challenges in terms of liquidity. Our approach is here to, you know, serve the need as we see it first in for traditional crypto lender. How far has the space come? I was going to say a traditional crypto lender 5 years in. So I think that's that was a nice serendipitous moment here. So yeah, for a traditional crypto lender, crypto-backed, NFT-backed loans would be the first stop. Then work towards the holistic solution that I described and that Kiril helped put some color around. So yeah, definitely there will be at some point an NFT trading platform, and hopefully it will be a liquid one so that we can bump up, you know, loan to value ratios and bring things up to the level of efficiency that you guys are used to get in conjunction with the traditional crypto assets backed loans. So, you know, super excited about that, and definitely we will have that at some point. Right. Do we have more questions? I sort of think this one is kind of the... Oh, no, though we do have more questions. Very good. Diego asks us the following. Might be Diego, I'm missing a no, because Anonymous missed a few letters, so who knows? Let us know in the show notes. Can I switch from an NFT collateralized loan to a crypto-backed loan and get my NFT? Kiril, this for you.
Okay. Yeah, okay, I'll take this one. So right now, the NFT loans are completely separate from the platform. In a case where obviously there's more volatility on the market, you think that collateral, that Bitcoin would be better collateral, that you are comfortable that managing that would be easier, there's no problem at all. Just paying back the NFT-backed loan. There's always the option for prepayment, and then opening up one on the platform. I think the perfect solution would have a combination of both, where the real-time value of the NFTs is, again, valued in real time via an algorithmic solution or human valuation, or a combination of both, and is added to the portfolio value of your Bitcoin, so that you have more or less a hybrid NFT and Bitcoin collateralized lending. We're not there yet, that's for sure, but that's coming closer every day. Essentially, the main capability here would be a mark-to-market capability, ability to price those NFTs, and having the reliable liquidators. So we're making progress there, and I see a future where we can have both.
Yeah, absolutely. Okay. This is, I think, a clear sign that we have covered all the questions. Thank you so much, Kiril, for doing this together with me. It has been enlightening, even for me in certain aspects. And
thanks for having me.
Absolutely. We'll do this sometime again when you're yet again wearing a different hat. We'll talk about DeFi and yield. I know you have opinions, strong opinions, weakly held, which is the right way to hold opinions in regards to crypto anyway. So yeah, thank you so much for watching, guys. This has been the September session of the AAA And I think we covered a lot of important ground, not only of where crypto and NFTs is today, where it stands, what the potential aspects of adoption, what the use cases are, what we think in terms of a timeline, both in unfolding products and services on our own platform, and then more philosophically of how we think that is going to generally play out. And I hope you find this as informative as we found it entertaining to create this one for you. So thank you very much for joining us, for watching, for asking all the questions, and we'll see you next time. Thank you.